The real estate market forecast. At least my thoughts on it. Hi, I'm Phil Pustiofsky with freedommentor.com. I'm a full-time real estate investor, real estate mentor and coach to many of the most successful real estate investors in North America, best-selling author, and this YouTube channel at this point is the most successful in the real estate investing genre. So, in this video, I'm going to share with you a unique perspective on real estate market forecasting. It's a very popular question I get. They want me to tell them what I think is going to happen in the future, either the short-term future or long-term future of the real estate market. Now, from one perspective, I think that's a great question to ask me because I am in the flow of deals. In fact, I might be more of the flow of deals than almost anyone in America. Because of all the different apprentices I have across the country, all of the different kinds of deals I'm seeing on a daily basis. I mean, we're talking hundreds and hundreds of deals on a monthly basis that I'm looking at. Whether it be just deals that are under contract, deals that are closing, I'm seeing a whole lot of deal action. So certainly you would think I would have a great beat on what's going to happen in the near future. Well, I'm going to shock you with this. But I don't know. I have no idea. And in fact, I don't try to pretend that I do. Furthermore, I would argue that it is a fruitless and a waste of time for you to put any mental energy towards trying to predict the future or forecasting what's going to happen in the real estate market. And that is more on a national level. Because on a local level, you may know and you may see some trends, and we'll talk about that too. But let me start with this concept of a broad-based real estate market forecast and why I think it's a complete waste of time to even worry your mental energy with it. First of all, humans have proven that we are lousy forecasters, okay? Humans are lousy forecasters. Don't believe me? Let me give you some examples. Okay, so here's our first example. Recall from the year 2007 that we were entering a global economic meltdown. It started in 2006, 2007, it was picking up steam, and of course by 2008, we totally had a collapse. The real estate bubble had burst, and there was mass changes in the economics around the world. Well, in 2007, there were signs of real trouble because the things were starting to tumble. And many of the economic advisors that many of the governments and the large lending institutions rely on, many of them had said that we weren't in the midst of a collapse. In fact, they said it was just a slight correction and everything was okay. They made a huge mistake. These are people that if anybody should be able to forecast, they should be able to. They got it wrong. And you say, okay, well, Phil, but you know what? They didn't see what was happening, but we're smarter now, are we? Well, in 2011, 2012, when the interest rates were incredibly low, they'd hit rock bottom. Many had argued the reason why they'd hit rock bottom was because the market had collapsed and they were trying to keep the market from going into a complete depression. Well, that turned out to be a complete divergence from the way that most economic cycles work, whereby when the market tumbles, the interest rates go up. That didn't happen. So that wasn't forecasted either. And I'll go one step further. You now go from 2011 to today. You look at any of the news articles or any of the economic papers that talk about where interest rates are going to go by 2014 or 2015, they're going to say the interest rates are going to go up. I don't know if you've looked at the interest rates in the United States as of the recording of this video, but they're at rock bottom. That was not predicted. That was not forecasted. Why? Humans are lousy forecasters. Okay, I hope we're on the same page there. This has been proven. I could go on and on. Now, there's another reason why it's a waste of your time. Not only is it a waste because humans are lousy at forecasting such things. So for you to think that you're somehow going to be a great forecaster, that is probably completely incorrect. And if you are that good at it, you might as well just head to the casino and make your living guessing the future based on gambling, because that's what you'd be good at, because you could guess the future. Now, there's more to it. I don't care what the forecast says, because my investing decisions, as should yours, should be based on today. Okay? So not only are we lousy forecasters, but investing decisions should be based on today. Investing decisions based on today. Okay. How do we make money in real estate? Either we buy the property, fix it up and resell it, buy it and resell it right away. So we trade it, we transact it, or we buy it and we rent it out and we make rental income. So either it's going to be I'm just going to say a flip, just for the purposes of this video, but there's a lot of different ways we could name it. Or we're going to call it a rental. When you boil it down, that's really how you make the money. Rental or flip. Now, if it's a flip, it's going to be short term, right? Well, if it's short term, basing our investing decision on what's going to happen in the future is a bad idea, because it's going to be a short-term flip anyways, right? So if we're going to make our money on the deal right away, then we have to make our money on that flip. We have to make our money, if you will, when we buy it. We have to buy it below value, below retail value, so that we can sell it for retail value. Make sense? I know this is pretty basic, right? Well, the rental's the same way. We're going to buy the property in such a way where we rent it for positive cash flow right away, correct? Because if it was a negative cash flow situation, we'd be losing money. And that's not a good idea when investing, okay? And that's based on today. Now, what happens if you buy a property for rental purposes long term and it goes down in value? What happens? Well, if you're positive cash flowing, it shouldn't matter, because you're bringing in money each and every month. And in fact, I would argue that if you're positive cash flowing, it would be very difficult for it to truly drop in value all that much, because the value could always be based on your cash flows. Does that make sense? That starts to make a lot more sense when you start talking about multifamily in commercial real estate as opposed to a single family home. But if you're positive cash flowing, it can't go down that far in value because you're making money. Rental rates don't typically take a nosedive either. So regardless of what the forecast is, it's okay, because you're winning. You're winning from day one, from today. And if it's a flip and it's short term, you're not going to own it long enough for any sort of market collapse, if you will, to make a huge impact, because you're in and you're out. Now you may say, well, Phil, but what if I own it for 7 months or a year and the market goes down? Well, you should have done your homework. And you should have only bought the property where you had enough of a margin of error. I have an entire video on that. So that you did have the room in case things change. And it's not just the market changing. It could be that it needed more fix-up work. It could mean all kinds of different things that could have happened. So, what's my summary of all this? I don't care what the forecast is. Because either I'm buying the property for a short-term purpose that I'm going to make a quick profit on it, or I'm buying it for rental purposes. Either way, the forecast doesn't matter to me. And in fact, if I had to base my investment on forecasting, well, then I'd be a speculator. I wouldn't be an investor. And that right there is a huge distinction between what we do, what I teach my apprentices, and why we're so successful, versus so many of the investors out there that try to make gambles. This is not a gamble. Every real estate deal you do should be calculated, and each one should be successful, because you can determine all kinds of details before you ever buy. And to reiterate what I've mentioned here on this video, said a different way, one of my favorite sentences by my mentor was, you make your money when you buy. You make your money when you buy. So what he meant by that was, I just bought a property today, by the way. I made my money today because I bought it low enough so that there is no way I'm going to lose money. There is no way I'm going to lose money. All right, so you make your money when you buy. Now, you actually collect your checks when you either sell or you rent, but the key is buy right. And this not just affect a flip. This is also for rentals too, because you can buy right, meaning you select you structure creative financing in such a way where you cash flow. Maybe you structure it in such a way where you do an interest-free owner finance loan, and each month the principal goes way down, so that over time you build tremendous amounts of equity from equity pay down, okay? From the loan being paid down, and each loan is like 100% principal payments. So it's not just the purchase price, it's also the terms, if you will. All right, so what's the forecast for the real estate market for this upcoming year? I don't know, and frankly, I don't care. Now, that's on a global level. That's on a national level, if you will, a 30,000-foot view level. Now, if we take this down to a more local level, I will say that when you are active in the real estate business, I'm not going to use the word forecast, but I'm going to use the word trends. There are certain trends you can pick up on a local level that could have an impact on some of the investing decisions you make. Here's an example. What if there is going to be a major employer is building a huge plant or a headquarters in your area? That could make a big difference. Now, oftentimes they will announce this, and then it'll take like 3 years before they start building. So just because they announce they're going to build a new plant doesn't mean that's going to happen. But once you see the bulldozers out there and they're actually constructing the headquarters building, that's a different story. So a major employer coming into town could make local news, and what that could do is that could impact some of your decisions. You may want to pick up more rent-to-owns close to that property. You may want to, because of the fact that you're going to have more people looking to rent, things of that nature. You may just notice that there are certain things happening locally that are in your favor, or vice versa. Maybe you see just a ton of commercial vacancy, and it seems like every single week there's another vacant commercial property down the road. And so that would indicate that there's a population shift and people are moving away from where you are. Now, that could play a role. That's not you being a good forecaster. That's you noticing local trends that could have an impact on the decisions you're making. Does that make sense? Okay, so I tend to notice the trends not from the news, but from my own activity, from your own investing. This is how you pick up on this. When you're out in the field and you're out there doing deals, you're going to run into situations and you're going to start to see things that are happening. Yes, you can talk to local agents and maybe the Chamber of Commerce, and you can pick up some data. But at the end of the day, the true signal, and you've heard me use that phrase in other videos, versus the noise, the true signal usually comes from your own personal experiences in your local marketplace and some of the trends that you pick up on, and that may impact some of the decisions you make. All right, well, I may have disappointed you in this video because you were hoping I would give you the real estate market forecast, but I'm definitely not going to do that because I'm not going to try to predict the future, because I'm lousy at predicting the future and most humans are as well. But these principles I share with you in this video can have long-lasting effects on your investing decisions. Don't try to bet on what's going to happen tomorrow. Definitely try to see certain major trends in your local area. That can help. But most importantly, make sure your deal works today. It's a profit deal today, regardless of what happens tomorrow. All right, well, thank you so much for watching this video. I'm Phil Pustiowski with freedommentor.com. You can add some comments, questions, concerns below this video. I try to carve out time to answer messages on YouTube. You also can go grab my book, How to Be a Real Estate Investor. You may really like that. Thanks again so much for watching. Also, feel free to subscribe to this YouTube channel. I've got all kinds of great videos on not only subjects surrounding this, like ignoring real estate news and those sorts of things, but all kinds of things that can help you as an investor be more intelligent and make better decisions. Thanks again for watching. I'll see you on the next video.